so I think, going into the FOMC decision, I think everyone was kind of on that 50 basis point hike track, which turned out to be correct. But I think the markets were really kind of inching up in expectation that the Fed would say, hey, we're just about done with our rate hikes. And the Fed just didn't do that, right? The Fed came out and basically said, hey, listen, we may have to still continue to hike significantly. And that was just obviously the wrong thing that the markets didn't want to hear. Now, I think it's important that investors realize that, like, the Fed had to be hawkish, right? They can't, if they came out and said, oh, we may be close to being done, the S&P would have rallied 3%. And remember, the Fed doesn't want the stock market or asset prices up. The reason they don't want asset prices up is because it creates what's called the wealth effect, which then creates inflation, or will hamper inflation coming back down. So in all fairness, I don't think we should be super surprised that the Fed remained hawkish. But at the same time, the market didn't like it, and we've seen a lot of selling since then. I, along with many others, were scratching their heads and saying, why didn't we sell off more? And then it was this one-day delay reaction where we then sold off heavily. And the only thing I could kind of think of is that you had a lot of people that had big short positions going in. We saw the VIX go up prior, which, remember, when the VIX goes up, it's people buying protection. So essentially they were buying puts, they were buying ways to protect themselves in case the markets collapsed. When the Fed made that statement, I think initially there was kind of like they were hawkish, but, let's still cover our shorts because the market's not collapsing. And it kind of kept the market up for one day. And then once we saw that get out of the way, then it was down, down, down in a major way. But yeah, I mean, that was really interesting to see. Yeah, I do think the VIX is still a proper barometer. I think there are periods where it gets a little skewed because the market is very keen on kind of buying protection going into these big events. So the FOMC decision, that kind of action, you saw just before it was kind of going up. But then the day they announced, like you said, the market didn't really sell off. The VIX actually sold off that day.
Exactly, sure did. Right? I was very confused.
The one thing I would say too is I think it's important to recognize that you can also look at what's going on in crypto, and I also think that that's playing a little role. Like, we've seen a lot of this kind of there's been some major battles being fought, between Binance and FTX, and who knew what, who put who out of business, and then you have people like Jim Cramer coming out and ripping Binance. I mean, I've seen some crazy stuff, and I think that unease makes people and investors very uneasy, where it's like, okay, well, yes, that's crypto and related to crypto, but can it potentially bleed over into the asset markets, the stock market? And I think that's kind of one of the little caveats that no one's talking about that probably does have some play in the stock market. It's these bad actors making bad decisions. It's then how many big players, like there are hedge funds, like we knew hedge funds were invested in FTX, that now took a hit. And then does that make them then have to sell equity stock positions because they have to cover losses in the crypto market? And then when you have people like Jim Cramer and other players that are very much in the stock market, and they start attacking, it just makes people very uneasy. Like, what's the real story here? And it makes investors, I think, just wary, and makes them more likely to kind of step back from all assets in total. So I don't think at this point we're going to get a major Santa Claus rally. But if you look at the S&P 500, it's down so sharply in the last 3 days from I think the CPI number is where we had that monster gap up, and then we just reversed. Yeah. And from there, we had the FOMC, and then Thursday and Friday sell-off. So I do kind of expect at least a little bit of a bounce at some point this week. But I don't think we're going to get that big Santa Claus rally. I also think that there's a lot of big stocks that you may see some kind of tax loss selling on into year end now. I mean, we have this last 2 weeks. If people are going to sell and kind of offset gains, if anyone has any gains, this is where that's going to happen. So, I mean, even Apple's down significantly. You could have some tax loss selling in Apple. You think at this stage, and I think it's all degrees, right? So if you're talking about a minor recession or a mid-level recession, absolutely. Because I think one of the things that's become very, very clear is that when you get interest rates low, like we've seen over the last 12, 13 years since 2009 from that financial crisis, the people that benefit are the wealthy, the people that have investments, and then who suffers, right? Well, the people that don't have investments aren't making that money. When you have inflation, the wealthy can tolerate that inflation. Anyone middle class, lower income can't. And I think there's been this big push from a political bias, and the central banks are feeling that pressure, where it's like, listen, you have to not make the rich richer. You have to take care of everyone else, because inflation is really crushing them. So I think A minor recession is what the Fed is fine with. I even think a mid-level recession. But having said that, if we got into kind of a depression-ish type scenario where, I mean, if you got inflation, I mean, unemployment over 10% or north of that level, then I think there's a bigger, pull there for stimulus again. I actually do think that we have to revert back to that mean. So you have these expansionary periods of the balance sheet of the Federal Reserve, the U.S. debt. I mean, we know all this printing of money has gone on, and there's no doubt that now the inflation bug is here. And I'm a big believer that the inflation side of things, it's not going to go away anytime soon. Now, again, when you look at where inflation was, 9% or so, dropping from 9 to 5 is probably the easy battle. Dropping from 5 to 2 or 4 to 2, that's going to be where it's really hard, and it's going to take a lot of effort from the central banks to get that down. And I think that's going to really put them in a box where we are going to go into a recession. And then you have to say to yourself, okay, when was the last recession where the market, the economy actually got itself out of a recession without stimulus? And it's been so long. I don't even think the market and investors even remember a period like that. And so if we are entering that new phase, or that old phase that is now new again, it's going to be problematic. I don't see the S&P making new all-time highs, honestly, for like 10 to 15 years from where we were in 2021. And I know that's crazy to say, but if you look historically, look at the dot-com bubble. The NASDAQ didn't make highs for 15 years again. And it's very common when you get these big bubbles, and we saw credit bubbles, we saw, all these type of bubbles, including in crypto, that it takes a long time for the markets to digest that once it collapses. You can't say like, hey guys, we're okay with 3%, right? I mean, if he starts that sliding scale, then all of a sudden the markets lose any sort of, or the Fed loses that credibility. So do I think that if we got to 12% unemployment, would he be okay with 3%? Yes, I do. But he can't say that. I mean, it would be like, it's like your parents like saying like, oh, don't do that. And then you do it and they're like, oh, it's okay. Here's a candy bar anyways, right? I mean, like the Fed can't do that at this stage. But I do think that there's always a breaking point for the Fed where, like even 4% inflation. What if we had a Great Depression with 25% unemployment? Would the Fed still be like, no, we can't stimulate even with 25% unemployment? 3%. I think 3.5. That'll be the new kind of reality of things. And again, I don't even think we get down to 3% for another year or two. But I think at that point, the economy's in such a bad recession that the Fed will say, you know what? People are really suffering out there. We have to do some sort of stimulus. We have to lower rates, even with slightly elevated inflation at this point. I'm expecting 2023, another 25% down, and I could easily see down total 50+% before all is said and done here. And again, then I think it's going to be a long, slow climb out of that mess, because even once the Fed starts stimulating, they're not going to be able to stimulate like the olden days where they just go nuts, because again, inflation is already going to be elevated, right? We're not at 1% or 2%, we're at 3.5%. And so they'll be able to do a little bit, but it's going to take a lot of time for those equity markets to get back to all-time highs. Having said that, I actually think Bitcoin will be that alternate asset once we get regulation, where you actually can see some really good upside in the next 3 to 5 years in that asset because of clarity and kind of this new regulation coming into the space where money will start getting attracted there.